Intraday trading is often about reacting to the market's momentum and getting the entry right. But doing that manually means watching every tick, and if you enter late, the move is already gone. So in this video, we'll build a simple intraday workflow in Automate using an opening range breakout. We'll mark the first 15 minutes range and take a trade only when the price actually breaks out. We'll set it up for both directions, where if the price breaks up, it places a buy order. If it breaks down, it places a sell order. And we'll lock in risk from the start using a stop loss and target. We'll do it in 3 parts. Define the opening range trigger up and down. Place orders for both directions with stop loss and target. Add a time-based exit as a backup. Let's begin. Open Automate and create a new workflow. Set the schedule to 9:15 when the market opens. Now, we want the workflow to watch both sides of the opening range. Add any condition because we want either side to trigger, not both. For example, if the upside triggers, the downside should get cancelled. Inside that any block, add a range breakout trigger. Set the time range from 9:15 to 9:30 and set the direction to up. This tells the workflow to trigger only when the price breaks above the high of that opening range. Select the symbol. Right beside it, add one more range breakout trigger. Use the same time range but set the direction to down. So now the workflow is watching both sides. When the range breaks above, upside will trigger. When the range breaks below, downside will trigger. Next, let's set up what should happen after the trigger. Add 2 place order blocks. Connect the upside trigger to the buy order block and connect the downside trigger to the sell order block. Enter your symbol, quantity, and set the product type as intraday. Now let's define the risk in rupees. We'll set stop loss to rupees 10 and target to 20 inside each place order block. By this, we mean the absolute difference in rupees from your entry. For example, if you enter at 100 with a stop loss of 10 and a target of 20, your position stop loss will be triggered at 90 and your target will be triggered at 120. So the moment the trade is entered, your exit levels are already defined. Now we'll add one final safety net. Sometimes price hits neither the stop loss nor the target and it just goes sideways. So if you don't want to carry the position into the close, add a wait block and set it to 3 p.m. After that, connect it to stop automation with square off enabled. This ensures that the open position is closed before the market closes. Once all your blocks are connected, click Start, give the workflow a name, and you're done. From here on, Automate handles everything. It tracks the opening range, triggers on breakout or breakdown, places the order, manages the stop loss and target, and exits before close if needed. You can track the entire flow from the dashboard, including when the trigger fired and when the order was placed. This is just one of the examples of how you can use Automate, and it's not a recommendation. Let us know if you need more such examples. Try it out now and let us know what you think.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.